Yo, welcome back to Infin Investors, the home for all new and non-investors. I'm Curtis, and today we've got another investment video for you, and I'm gonna be doing something different. I just wanna talk about Sirius Minerals. Let's get serious about this. I really want to understand what the attraction is to Sirius Minerals, and I'm happy to be proven wrong. I'm more than happy for people to tell me, facts and information that I don't know about the company specifically. But there has been a lot of talk on the free trade community. There's been a lot of talk on our own community. There's been a lot of talk in the YouTube comments. I do get the question, will I invest in Sirius, or what's my thoughts on Sirius? There's been a few questions in my DMs on Instagram about Sirius, and it's just getting a bit serious for me. And I'm trying to understand, what is the attraction about Sirius Minerals. So for those of you that don't know, I'm going to just do a quick high level analysis on what Sirius Minerals is and what they do, and then I'm just going to really try and understand what is the key selling point, and what, if it was me, or it is me, thinking to invest, would I invest in Sirius Minerals? So if you want to know more, please like, please comment, please subscribe. I'm on a mission to get to 2,500 subscribers and get the world of investing out to more people in a clear, simple and transparent manner. But first, let's get serious. So right now on TradingView, you can see Sirius Minerals SXX, and it's not looking sexy at all. The current share price is 4.4p at the moment. Now, if we zoom in, we can see that there has been a very significant drop recently. It's started to climb up a little bit, probably to do with earnings of some kind, and then it's kind of just plateauing at the moment. But if you want to look at the history, and I'm going to just start to slowly zoom out, and first of all I'm going to look at some technicals here as well. You can see the RSI, it's a completely oversold stock at the moment. You can see on the MACD, it's just being sold off at the moment. And really and truly, if you look at it historically, and I'm just going to get rid of these two things that pop out, just the one, it's been trending downwards arguably since about this point here, which is about the 6th of August 2018. So from that point onwards, it's continued to trend downwards. Now, anytime that I'm looking to invest in a stock, the first place I go to just to get my high level analysis is always simply Wall Street. I say this to you guys all the time. This is not to tell me to invest, but this is just to give me a high level summary, and decide whether it's worth my time looking into it more. So this basically says that the share price has been tanking down, and I'm going to get into some of the reasons why it's been tanking. 7-day return minus 58.3%, the 1-year return minus 85.3%. It's continuously performing poorly. It's quite volatile versus the industry, so you can't really trust it. All of the returns, 7-day, 30-day, 90-day, 1 year, 3 year and 5 year, is negative. Every single time frame has been a negative return. There's not been 1 year or one period where it's generated a positive turn, in terms of the typical periods that they look at. We'll get into the news a little bit later. The PE ratio is 2.76. You can't really tell that in isolation what that really means. You'd have to compare it to the industry, but apparently it's good value in terms of the industry. And to be honest, I would suspect so, just because the share price is so low. Obviously, they haven't had no earnings, so there is no PEG growth ratio. And obviously, they've got a very, very low price to book ratio based off the assets and the share price. And again, that's just by virtue of the share price being so low. But I don't think that is a great metric to look at in this context. The future growth outlook is minus 87.3%. I'm always looking for companies at least 30% higher, 30% up, sorry, not 30% higher. Generally, just because I want to see a good level of growth. If the company is profitable, then I expect the share price to rise, and I expect to be profitable as well in the next 1 to 3 year period. When you look at obviously the past performance, we know for a fact that obviously the past performance has been bad. It's just red everywhere. Like everything is a red flag to me. Every single thing. When we look at the debt to equity ratio, there is some equity, to be fair, and the debt seems to be growing, but it is kind of growing in proportion to the equity, at least. So some graphs you might see that the equity is tanking and the debt's going up. At least that is not happening in this case, but I still think it's quite a high level of debt on the balance sheet, considering where the company's at. Obviously, it doesn't pay any form of dividend at the moment. Now, if I was just looking at this carte blanche, just straight off the bat, any stock, any name, this would definitely not be a stock that I would even. I mean, I wouldn't. I would have probably gone off the page after the first few metrics. To be fair, but there seems to be this not obsession, but support this support for Sirius Minerals. So I wanted to obviously read some articles about what's been going on recently. And for those of you that don't know, Sirius has. So what Sirius Minerals is? Let me just backtrack. Sirius Minerals is a miner. They mine minerals, particularly one called potash, which has a lot of potassium and benefits and so forth. And they're looking to do that within the UK. So plans to build, and I'm getting this from the Financial Times, and this is from the 6th of August, so this is not a recent article, but I will come a bit more recent. Plans to build a huge fertilizer mine on Britain's North York moors were thrown into jeopardy when turbulent global markets forced developer Sirius Minerals to pull a 500 million bond sale. Now, this was on the 6th of August. If we go to TradingView, and we start to look at what's happened around the 6th of August, as you can see, that directly correlates with that drop that you can kind of see there. The decision to pull the sale, which Sirius needs to unlock further financing from JP Morgan Chase, sent shares in the London-listed company plunging almost 30% on Tuesday. Sirius, which is the brainchild of its chief executive Chris Fraser, and whose shares have been a favourite of retail investors, needs the money to finish an ambitious project that involves sinking two 1.5 kilometre shafts to access a huge deposit of polyhalite, the mineral that can be used as a fertiliser but is not yet commercially proven. Mr. Fraser, a former Citigroup banker in Australia, insisted that the company would be able to sell the bond next month after the current bout of US-China tensions ease. This is about good execution. The market is just going through a readjustment and the moment in terms of pricing and risk. He told the Financial Times from New York, as soon as the market comes back online, the other side of the summer break, we will wait for the period of stability to launch the transaction. However, if the company is not able to successfully return to the bond market by the end of September, secure alternative funding, or sell the business, Sirius would face a possible risk of administration, according to the documents that accompanied the proposed sale. So, if the company is not able to successfully return to the bond market by the end of September, secure alternative funding, or sell the business, Sirius would face a possible risk of administration, according to the document. And by my watch, we are 10 days away from the end of September. So at this current moment, I don't believe they've done any one of those three things, but obviously there's still 10 days left and a lot can change. Mr. Fraser insisted that the company would take the time to continue talking to its large investors who are supportive of the project, as well as unlock financing from JP Morgan. The bond sale will release the proceeds of $400 million of convertible notes and a $50 million equity investment from Australian billionaire Gina Rinehart's Hancock's Prospecting. And then it goes on to say a little bit more. If I scoot over to this article, which was on the 17th of September. The 17th of September. Sirius Minerals shares crash after miner pulls 500 million bond sale. So this is just reiterating that the bond sale, the shares crashed. It's now the UK's biggest mining project in a generation will come to a halt, putting 1,200 jobs at risk. Chief Executive Chris Fraser said it was not possible to issue the junk bond, which required to unlock 2.5 billion financing package for the mine because of ongoing poor bond market conditions. Okay, Sirius shares tumbled by 60% to 4p. The project involves, we know what the project involves. They need to secure additional funding, blah, 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 blah. And then this bit, a sovereign wealth fund, a potash producer such as Eurochem or a big mining group such as BHP would be potential partners, he added. The Qatar Investment Authority is effectively the biggest shareholder in Sirius. It owns a 3.3% equity stake and $100 million worth of convertible bonds. Institutional investors in the City of London and beyond have never warmed to the company, which has a share register dominated by 85,000 retail investors, about a quarter of whom live in the northeast and Yorkshire. The difficulty of building a global market of polyhalite, the risk of delays and cost overruns, and uncertainty about the commercial clout and strength of some partners. Sirius had to buy a stake in its Brazilian distributor, or are some of the concerns of investors. There was something else that was a little bit interesting as well. The market for polyhalite remains very small. Sirius's planned production is around 30 times larger than the total polyhalite market in 2018, he added. This, for me personally, just screams absolute red flags. And when you see the sentiment on Twitter at the moment, they released their half-yearly reports on September the 17th, and everyone is just, full of negative, because I think there was a little bit of leaking that goes on that actually allowed it to have a little bit of a pump and dump, which you might have seen as well. A lot of things are not looking rosy. They've just announced all of their new apprentices, but they might be losing 1,200 jobs. Anyway, let me get to the point of this video. This is the type of thing that really worries me about investing, because I think one of the key drivers and the reasons why people are investing in Sirius Minerals is because the share price is so low. So because they're thinking, you know what, if I risk £100, £200, and it's 4p and it goes up to 6p, then you know what, I make £300. That for me is trading. That for me is not actually investing. Investing for me, I will always go back, is the fact that you think something is going to generate wealth for you in the medium to long term. Now, if they do get funding and if the project does kick off, then I think it's set to, finish or complete by 2021. Then potentially that can be an investment. But I think at this stage, it is definitely speculation rather than an actual fundamentals based investment. So the reason for me producing this video is that when you see companies and stocks like Sirius Minerals that have a very, very cheap share price, don't think that just because the share price is cheap, it's worth the risk. For me, the exact same thing happened with Debenhams. If we look at Debenhams, a lot of people started to invest. I don't think it's even going to allow me. Is it not going to let me show Debenhams anymore? What's the Debenhams? We'll try. I'm going to try this. Can't seem to find Debenhams. They've probably taken it off. The same thing happened with Debenhams, where the share price was so low, people thought I can put some money into it, and then obviously they went into administration, and then next thing you know, they're looking at, what's the sports director's boss name? Mike Ashley, to try and he wanted to buy it, and then they didn't want to sell it to him, and then now they're sort of stuck and probably been taken off sale. It looks like a very similar situation. For me personally, it doesn't really matter how cheap it is. Like, if I'm going to only invest, say, £50 into something, then I'm not going to make that much money anyway. So I'd rather just spend that money on, a PlayStation game or something that's going to give me some joy or some form of happiness. If I'm going to spend, I don't know, thousands and thousands of pounds on this in a punt, then it's a very, 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 very risky move. So there's a story about this pub landlord who's lost £120,000 of his life savings that he put into Sirius Minerals, and now they're angry. He put some of his wife's money in, so he's not getting anything that night, and it's just literally dripping. I think they've got about 13 grand left or something like that. That for me is just an incredible amount of risk to back one individual stock. I think some of my investments sometimes are risky, and I'm only dollar cost averaging about £100 into each investments on average a month. If he put all of them at 19p, I think, and then obviously they've now started to tank. Listen, my not so advice to you, but my comments to you, if this was me personally, is that if there's any company that's not showing signs of progress, that is a pun, definitely do not risk any more than you're willing to lose. But if you are willing to lose the money and you know that it's a bit of a gamble, then my question to you be, why would you actually invest in it anyway? Why would you spend that money if you're pretty confident that nothing's going to happen? If you're putting a lot of money because you actually think this could be a massive opportunity, and it's not proven yet, but you think there's some commercial opportunity to it, then for me, I'll always say, exercise the most amount of caution, because in the last year I've seen this twice, Debenhams, and it potentially looks like it's going to happen with Sirius, and it might happen again in a few months time with another stock. And this for me is not an investable opportunity at this current moment. Now, if they get the Qatar Investment Authority or another investor to actually go and give them the 500 million that they need, then is this a potential opportunity? Absolutely. And would I invest? Probably not, but I wouldn't knock anyone investing at that point, because you could probably see a bounce back and actually some growth. And you might be investing at 5p at that point, or maybe it's 6p, but it could go back up to 19p or 20p, and then you're laughing, you 4 extra money. So there is a potential possibility, but my steer would be to wait for some good news first before plowing a whole bunch of money into this. And then once you get that good news, that bit of confirmation, that could be possible. Otherwise, in my mind, you are worse than trading. You're actually just gambling, because even if you were trading, you would look at technical analysis, and the technical analysis tells you that this is potentially not the right time to even buy. But listen, I only did this video so you guys can get in the comments about Sirius. I know some of you have invested. If you've invested in Sirius Minerals, put your reasons out there. I want to know why you've invested, and I want to know, what you expect, what your expectations are for the future of Sirius Minerals. Other than that, please like, please comment, please subscribe, and I will catch you next time with another investment video. Peace.